What's going on, guys? You already know who it is. It's your boy E is Profitable. Welcome back. Today is January 11th. I'm going to go over today's price action. I'll go over how I view the market, how I determine my daily bias. You'll have a glimpse on all of that. All right, so let's get straight to it. These videos are meant for educational purposes only. Any trades taken in the financial markets are under your own discretion. The information taught should be demoed and only taken to live accounts under your own responsibility. E is Profitable will not be held liable for anything you do with the information presented. All right, guys, so we're here. The first thing I typically do is I start in the daily time frame. You always want to start in the daily time frame. The daily time frame is the quickest route in figuring out the daily bias. How do you come up with your daily bias? Well, you have to follow liquidity. Where is the money? What has been taken? What is left to be taken? All right, so immediately, if we go ahead and remove today's price action, this is where we were. So what I like to do typically is I'll like to mark any daily highs that are nearby. So we know that we have this daily high. But if you notice, that daily high is very close to this daily high and this daily high. So you can mark that all together. This is an area with lots of liquidity. If you're looking at people that sold short up here and up here, what do people typically do? Is they're moving their stop losses. Right, so when you see an area like this that is respected by price action, you know that most likely there's a lot of liquidity sitting in that area. So again, I had marked these highs, relative equal highs, right? If you're looking at the market, if you're looking at it in the sense where people that got in short up here are most likely moving their stop losses, this is an area with high liquidity. So I had that marked. I also had this daily imbalance sitting up here that I know that most likely the market is going to have the tendency to reach after. And then one more thing that I notice is right here, if you take a look at from this candles to this candle, you see that little space. This is a volume imbalance. So I had that area also marked. Right, so what that means is that the market is going to want to reach up there to rebalance those areas in simple terms. All right, so we move down to the 4 hour. We can see where the market down here, it created liquidity. So again, that you have to remember, the market is going to create liquidity and then it's going to attack it later on. So when you see stuff like this, you see how this is a double bottom. It's doing that for a reason. It's inducing buyers. So eventually, not right now, but eventually the market is going to take out that area. While some people are going to look at that like, oh, this is strong support. It's not strong support. It's inducing buyers. Well, the same thing happened up here. If you notice, right, if you're looking at this like a retail trader, this right here essentially would be what they call resistance, strong resistance. The market tapped here, came back, tapped here a second time. So what is that doing? It's inducing sellers, right? So you have to look at the market in that respect. You have to see what is happening, and where do you think the market is going next? All right, so let's go down to the 1 hour. So you, again, don't forget this area up here and this area here. That's a double top, right? So a lot of people were getting into sells here. They're playing it short to the downside, right? So today's Tuesday, Wednesday actually. But what I want you to take a look at is what is happening here between Monday and Tuesday. So if you notice, this was Monday's price action. Price came up here, respected that quote unquote resistance area, right? Inducing again sellers. And then we went into Tuesday. And what did Tuesday do? Tuesday went below Monday. Now, if you follow my channel and you follow my group, you know that I like to preach that over 70% of the times, either Tuesday is going to form either the high or the low of the week, right? So if you see that Tuesday goes below Monday, then there's a high chance that the market is going to continue up higher between Wednesday and Thursday, etc. You got to look at a candle, right? This is let's say this was a bullish candle, right? And this is the top wick, and this is the bottom wick, right? So let's imagine this is a weekly candle. Where does the market open? The market opens right here. This is the opening, right? So this candle right here that I'll go ahead and color it red, that candle right there would be Monday, right? So think about price action in that way. So that's Monday. Tuesday, we wick down. That's the wick that you see here, right? And then what happens? What's going to happen Wednesday? We're going to go up. Thursday, we go up. We might do this. And then Friday, we settle right here, right? That is a bullish candle. So when you look at it in that way, you know that, okay, Monday's open was here. This is that red candle, right? What did we do? We came up here. This is representing what you see here. We came up here on Monday, right? We came back down. Tuesday, we come down here, right? So we're here. So this little area here becomes the wick of the candle, right? So if we're bullish, right, because we know that we have these double tops sitting at the top, we know that the market is now going to do what? Expand to the upside to take out the liquidity that's sitting up here. And again, if you study this, it helps you understand what the market is doing in that week. That's why a lot of traders like to wait for Monday to roll by and then see what happens on Tuesday. If Tuesday goes above Monday, then it's a high probability that the market is going to be bearish, right? That it's forming a bearish it's forming a bearish candle. Sometimes you'll see the low or the high being formed on Wednesday, and that's something that you'll understand through experience, how to utilize that to your advantage. But for the most part, when you look at a Tuesday, just compare it to Monday and ask yourself, are we above Monday or below Monday? So again, in this case, we were below. So since I saw that we went below Monday on Tuesday, I'm expecting Wednesday to be bullish. I'm expecting Wednesday to attack those relative equal highs, right? So let me go ahead and delete this. All right, so let's go ahead and go down to the 15-minute. You can study this even further, and you can see where the market here created like a miniature double bottom. You see a bottom, another bottom, but then what it took out liquidity, right? Again, the market is creating liquidity, and it does it in different ways. So again, we have that double top, people that are selling short. We have short-term buyers that see this double bottom and are buying. So what the market is doing, it crashes below them. It's taking them out. It's taking that liquidity because the algorithm knows that it wants to run higher. And before doing so, it's going to take out liquidity. So that's exactly what it did here. It took out sell-side liquidity. So that's why it's very important to organize yourself with templates and to study price action, because price action is going to reveal to you what's happening next. But you have to get good at reading the tape, right? By reading the tape, you can kind of figure out what's going to happen next. All right, so then we go into Wednesday. That's the beginning of Wednesday. That was Wednesday morning, 6 a.m., right? Boom. So now New York started. The New York session start. So when the New York session starts, right, and I see this reaction, you see how they took it right to that top, that double top, and then look how slick they are, how strategic they are. What did they do next? They gave you a bearish engulfing candle. Why did they do that? They did that to induce more sellers, because now retail traders are looking at this area as what? Strong resistance, right? So this is why you have to pay attention to what's happening, right? And it's going to, again, reveal to you what's going to happen next. So we know that there's a double top there and further in the back. And then we have this area that has now also been respected, again, inducing more sellers. We know we have that volume imbalance sitting up top. We know that we have this fair value gap sitting even higher, right? So these are all clues and footprints that the market is leaving, letting you know where it wants to head next, right? So we'll go down to the 1 minute, right? And now watch what happens. So immediately the market does what? It takes out the liquidity, right? So again, it induced traders to go short, right, by that triple top. But then it took out sell side liquidity, and then it started to do what? Started to move higher, right? Now watch this. So now think retail. Retail sees the market peak up here. What do you think most retail traders are doing? They're selling short, right? Because they're trying to catch that top, right? Think about when you first started trading. You wanted to catch those tops. You wanted to catch those bottoms. 90% of the times, the market is going to keep going higher. And then it makes you think that that's the top, and then it goes higher. And then it makes you think that that's the top, and it goes higher and higher. And it keeps taking you out, right? Don't do that to yourself. When you see these moves happen, you need to look for buying opportunities, not selling opportunities, right? So let's keep going. Just pay attention to what the market does. And then I'm going to show you where the different areas where you could have entered. So again, think about the traders that got in short here. Again, they see these two bearish candles, and what are that gives them confidence. It's inducing sellers to the market. What is the market going to do? Is going to come back up there and take them out. Okay, and then it's going to continue to reach higher until it touches that volume imbalance, and then it's going to continue higher until it reaches up to its target. All right, so now that you've seen that, let's go over the different entry opportunities that you could have had. All right, so let's start here. So as you can see, this was the New York session. You can see now with clarity what the market is doing. You see it created these relative equal highs. The market comes down, takes out sell side, comes up, takes them out. Boom. We're going into New York. What did it do again? It created another relative equal highs, double tops. People are selling short, scalpers. What does the market do? It induces sellers and it takes them out. Now let's go into the 1 minute time frame. I want to show you something here. I teach this. This is the S&D algorithmic pattern. You can check that out on my other videos. But when the market wants to move higher, for the most part, what it's going to do is going to take out the highs. Then it's going to go after the lows, and then it moves higher. And you can see that exactly here, how the market takes out the highs, immediately takes out the lows, and then it moves higher. Again, you can watch that video. It's called S&D pattern, algorithmic pattern. All right. So once the market touches that triple top, it creates this triple top, right? Because we know there was a double top sitting up there before. Once it did that, I'm waiting for the market to retrace to a PD array that I have marked. And I had this PD array marked, this 1 minute fair value gap marked, right? Why did I have that marked? Because this was the area with high manipulation, took out the highs, took out the lows, and with a strong expansion, a strong intent to the upside. So the market is gonna, for the most part, the market is going to want to come back to mitigate that area. So I had that area marked. Once the market came back down, you see how I took out sell side liquidity. My TP was actually these highs right here. All right, so follow price. Price is going to reveal a lot to you. All right, so once price touches that 1 minute fair value gap and it starts to break higher, right? This is an old fair value gap, right, that it breaks to it. So this is a sell side fair value gap. Price breaks through it. When price breaks through it, it becomes support, right? So you have another 1 minute fair value gap sitting here. Price never really truly touched into it, but once you know where price is headed next, right, because we know that price is gonna want to come up here, then the entry doesn't really matter. And that's why ICT tells you that the entry is the last thing you need to worry about. Once you have the narrative right and your biases right, and you're on the right side of the market, you can literally enter in any one of these candles. You don't have to wait for price to tap into a 1 minute fair value gap or an order block or any of that, right? It's good to do that at first when you're first learning, but over time you'll realize that the entry doesn't really matter. You don't need perfection in your entry. You just need to know what side of the market you're in and where it's headed next. All right, so as you can see, when the market breaks structure, it's creating these fair value gaps. Notice where the market breaks structure again, it creates what? Another fair value gap. Those are your entry points. If you look at my previous videos, again, I tell you that when the market breaks through structures, pay attention if there's a fair value gap that's being formed. And if it does, wait for price to come back to it and get in. So that's what the market did here. It came back to this 1 minute fair value gap, and then it continued higher until it took out that triple top now with this move here, and then it moves higher, right? So now we're up here, took out buy side liquidity again, making with these two bearish candles, it's inducing sellers. But what does it do? It come back down to this 1 minute order block, which is also a 15-minute imbalance. If you go to the 15-minute time frame, it'll look much clearer. Where is it at? Right there. Right, so you have to have all these things marked, and you have to pay attention to price and look to see what is price doing when it touches those areas. So here you had another opportunity to get in. I did not participate in the PM session. I made 2,500 in the morning session, so I just sat on my hands and just pretty much studied price action. But if you can notice here where we have a similar concept, market is breaking structure higher, coming down to a fair value gap, breaking higher. Now another thing that you'll notice that you can definitely study as well is pay attention to the order blocks that are formed when price touches a fair value gap. You'll notice that the market has a tendency to come back to mitigate those order blocks. All right, so that's just like something for you guys to study. But again, study price action, take a look at the market, and try to figure out why it's doing what it's doing, right? And as you can see, it went straight into that volume imbalance, and then this is where we're at today. So I don't recommend you guys to trade during CPI. I'm going to sit on my hands on Thursday and see what the market does, and then maybe participate on Friday. But I am expecting the market to reach a higher to mitigate some of this up here, the daily imbalance, 4-hour imbalance, 15-minute. So you see, I'm marking everything that I see, and it's your job to do so and to figure out where is the money sitting, where can we go next. So you know that once these areas up here get exhausted, what is the market going to do next? It's going to target sell side. And don't forget, you have these beautiful double bottoms sitting here. So you know that if the market starts to show interest in pushing down lower and lower, you know that the market flipped from bullish to bearish, and now we're headed towards the bottom down here to take out that double bottom and to go after those monthly lows. So again, guys, study price action, and it reveals a lot. You can learn a lot by just looking at price and by just trying to figure out and ask yourself, where is money sitting, right? Double bottoms, double top, trend line liquidity, all that retail nonsense, right, that you learn in books and you learn in other videos. Use that to your advantage, because again, the algorithm is going to induce people by showing those different patterns, right, that normally people would get in. All right, guys, so I'm cutting this here. I know it was pretty long-winded, but hopefully you guys got some insight. Hopefully the video was insightful, and you guys can reach me at my email, Telegram channel, Twitter preferably, and or Instagram. All right, talk to you guys later.